Hello, this is the TradeSite Forex market preview and international economic data roadmap for the week beginning Sunday, June 26, 2016, and ending Friday, July 1st. Done with the first half of the year, another quarter gone by. And what an ending it was. Boy, our single biggest winner in TradeSite history from their trade calls on Friday, from Thursday night going into Friday, as the Brexit vote went in the direction of leave, surprising everyone at a certain point where the polls were not showing that and the early results were not showing that, and yet that's what happened. And the pound was up a little bit ahead of the session start. We had a trade call short under the upper break, and it went as much as 1,600 pips in the money. We closed out about 1,200 pips in the money. So the biggest single day winner in TradeSite history. I think our biggest total winner, even from start to finish over a couple of days, was about 800 pips. So this set a new record for us, but certainly very nice ending to the week. All right, here's a look at the dollar index daily chart. You can see the spike in the dollar on the decision. Let's go through the key currency pairs. The euro dollar came in. You gotta love this. Look at that. On Thursday, the euro had just come up exactly to that green static trend line, almost to the pip. And then that was the top, and then Friday we roll over, heading back towards the red static trend line, the other direction. Here's a look at the pound dollar. Of course, this is the one that gets crushed, going from 1.5000 to 1 as low as basically 3,200 in a day. Ouch. Aussie dollar also dropped a bit. Pound yen dropped, obviously. Pound dropped against everything. The euro got hurt too in all this. Pound Swiss down. So the dollar is really the beneficiary of this action, but it's not a positive for the global economy, unfortunately. There's going to be a price to pay for this one, and unfortunately I think a lot of people don't understand what they were voting for. That part I think is true, but it's a mistake what happened in that election. That's going to cause some serious problems globally for a while, so it puts all the markets at least in probably a more volatile space, but it'll be interesting to see where this leads. All right, so let's look at the intra-week action. This is 30-minute candles on the euro dollar. Range from high to low for the week, 500 pips basically, ish, all of it on Friday. Prior to Friday, it had been about 180 pips. It was still a decent week. We were plugging away at usual, and then this happened. And it wasn't the euro that we made the money in. It was the pound. High to low of the week here, like I said, about 1,800 pips. So, woo, that's quite a crushing right there. And look at how the pound was just on the rise. Everybody was so sure that it wasn't going to happen. I mean, I was pretty sure, just based on the polling. Not that I would know what's really going on the ground over in the UK. But certainly the polling didn't indicate that it was going to pass, and it did. So there's that. Every once in a while, self-inflicted wounds, as I call them. At any rate, what do we have for the week ahead? Well, I would expect a little more volatility. First of all, I've got to warn you, our Forex levels on Sunday are A, going up a little late because Mark's on vacation until Sunday evening, and B, obviously when you have that kind of range in the pound for the day, the pivot series and everything is going to be hundreds and hundreds of pips wide between each line. So, it's not going to be easy to use the levels. We'll see how we can find trade calls for Sunday night. We'll probably have to use our Murray Math tool or some of the others to get through that. All right, let's look at the data that's coming out this week and see if there's anything else that we need to be aware of. I think we've got plenty already. But trade balance out of New Zealand Sunday night. Monday is very light. We've got money supply out of Europe, and then the goods trade balance here in the U.S. says flash services PMI, although another calendar I looked at did not say that. Tuesday, German import prices, CB realized sales out of the UK. The third and final look at GDP from the first quarter here in the U.S. That's not usually a big deal. It's the first look that matters. S&P Composite 20 Housing Price Index, Consumer Confidence here in the U.S., Richmond Manufacturing Index, retail sales out of Japan, the Switzerland's USB Consumption Indicator going into Wednesday morning, nationwide HPI out of the UK. Italy goes on bank holiday. German preliminary CPI and Spanish CPI. Got mortgage approvals out of the UK. We got personal income and spending here in the US, along with the core PCE price index, pending home sales, the weekly oil inventories number. There's some bank stress test results. Probably wouldn't be problematic what they did, but then again, who knows going forward? I think some things will have changed. You're going to see companies like JP Morgan and Goldman withdrawing some of their business from the UK. This is not going to be pretty. Consumer confidence out of the UK, industrial production out of Japan, business confidence out of New Zealand, Australia's private sector credit, Japan's housing starts on Thursday, morning in the wee hours. German retail sales out of Europe, French preliminary PMI and consumer spending. German unemployment change. We got UK's current account and final GDP and index of services and revised business investment at 4:30 a.m. Eastern Time on Thursday. Europe's CPI, Italian preliminary CPI and 10-year bond auction out of Italy. Monetary meeting minutes from the last meeting out of the ECB. Canada's got all their GDP, RMPI, and IPPI data Thursday morning at 8:30 a.m. along with our weekly unemployment claims number here in the U.S. Chicago PMI at 9:45. Natty Gas, the weekly number. Japan dumps their big stuff here. You got the CPI both nationally and in Tokyo. Household spending and the unemployment rate, followed by manufacturing and non-manufacturing index over in Japan. That's for Thursday evening here in the U.S. Same numbers, the manufacturing PMI and non-manufacturing PMI out of China are due. We go to, of course, CPI out of Japan, consumer confidence out of Japan, commodity prices here in Australia, out of Australia. Swiss retail sales, Spanish manufacturing PMI, Swiss manufacturing PMI, same for Italy, France, Germany, the broad European sector, Italian unemployment rate. UK's got their manufacturing PMI data. Europe's got their unemployment rate. That's a big number. Bank holiday in Canada on Friday, they'll be closed. US ISM manufacturing PMI, construction spending, ISM services, and total vehicle sales. So none of our big three, no Fed meeting, no GDP first look, nothing that we usually go half size ahead of. Wouldn't blame anybody for being half size, but we I don't know, after the winter we just had, I don't know why you'd worry about it at this point in time. So we'll see. We'll just call it. Obviously, expect extra volatility as the market tries to grasp what exactly this means. Not anything positive, I would say, in general. Charts, as usual, brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great weekend and look forward to, by the way, next Friday is the beginning of the long 4th of July weekend. So we'll have probably some light action on Friday next week, I would assume, even with everything that's going on here. Hard to say what will happen the following week because Monday's a U.S. bank holiday for 4th of July. Have a good one.